Hello everyone. Welcome back to Stock Market Meridian. Today is 27th August 2026 and you're watching today's post-market report. Let's begin with today's market action. For the second consecutive day, Indian markets opened on a flat note, remained under selling pressure throughout the session and eventually closed in the negative zone. In the sectoral space, PSU banks and media were among the top losers, while pharma and healthcare emerged as the top performing sectors. Now, let's look at the major stocks and corporate developments investors need to watch. The power equipment space was on fire today. Shares of Hitachi Energy India, GE Vernova, TD Power, Siemens and CG Power rallied by up to 5%. The key trigger? It's the rapidly growing electricity demand from AI data centers, combined with a major shift in US energy policy. NVIDIA's latest results highlighted the explosive growth in AI infrastructure, with data center revenue reportedly jumping 117% year-on-year to $89 billion in Q2. And that's important because AI data centers require massive amounts of uninterrupted electricity, creating strong demand for transformers, switchgear, substations, and other power equipment. Adding another boost, NVIDIA has partnered with major asset managers, including BlackRock, Blackstone, Apollo, Brookfield, Goldman Sachs, and KKR to mobilize more than $500 billion toward global AI infrastructure. At the same time, the US is tightening restrictions on Chinese equipment used in its electricity grid. The Trump administration has declared a national emergency and moved to restrict certain foreign-made bulk power equipment, software, and digital grid controls. This could redirect a significant portion of global power equipment demand toward non-Chinese suppliers, potentially creating opportunities for Indian manufacturers. So the combination of AI power demand plus global supply chain diversification is keeping power stocks firmly in focus. And now, another major global development could create volatility for technology stocks. The Trump administration is reportedly evaluating new tariffs on semiconductor imports. The potential restrictions could extend beyond standalone chips to include finished electronics and industrial equipment containing semiconductors. The objective is clear. Encourage semiconductor manufacturing inside the United States and reduce dependence on overseas suppliers. But for global technology companies, this could mean higher production costs and fresh supply chain challenges. Major semiconductor hubs such as Taiwan, South Korea, and Japan are closely watching the situation. For investors, the key takeaway is simple. Any expansion of semiconductor tariffs could increase headline risk for global tech and semiconductor stocks. Next, gold prices are soaring, but jewelry stocks are telling a very different story. Today, Kalyan Jewellers gained more than 2%, while Senco Gold, PC Jeweler and Sky Gold traded in the red. Domestic 24-carat gold reached around 1,60,000 rupees per 10 grams, while 22-carat gold traded near 1,46,667 rupees. Gold prices have been supported by global uncertainty and currency-related concerns. But there's a catch for jewelry companies. Higher gold prices can increase revenue, but consumers are also increasingly turning to old gold exchanges and recycling, which can put pressure on operating margins. The sector is also facing challenges from fewer wedding dates, the Adhik Maas period, and the customs duty increase. However, analysts expect demand to improve in the second half of FY27, supported by the festive and wedding seasons. Organized players such as Titan and Kalyan Jewellers continue to benefit from the long-term formalization of the jewelry industry. So the short-term picture may remain mixed, but the long-term jewelry opportunity remains firmly on investors' radar. Now, a major corporate debt story. The National Company Law Tribunal, or NCLT, has approved a repayment plan for Z Group founder Subhash Chandra's personal insolvency case. The striking part? Creditors with admitted claims of approximately 22,006 crore rupees will recover just 6.5 crore rupees under the approved plan. That represents a staggering 99.97% haircut. The case originated from a personal guarantee provided by Subhash Chandra against a loan extended to Vivek Infracon. The insolvency proceedings were initiated after Indiabulls Housing Finance, now known as Samman Capital, approached the NCLT. The ruling has sparked significant debate around personal insolvency and debt recovery in India. Former liquor businessman Vijay Mallya also reacted on X, questioning the difference in recovery outcomes across various high-profile debt cases. For the broader market, the case highlights the continuing debate around creditor recovery, personal guarantees, and India's insolvency framework. Now, here's a stock story that grabbed serious attention. Axis Solutions has delivered a staggering 2,220% return in just 1 year, rising from around 25 rupees in September 2025 to nearly 580 rupees on the BSE. That means a hypothetical 1 lakh rupee investment would have grown to around 23.2 lakh rupees. But the rally isn't based only on momentum. The company reported a 78% year-on-year jump in Q1 revenue to 48.99 crore rupees, while EBITDA more than doubled to 6.22 crore rupees. Profit after tax also surged 98% to 3.10 crore rupees. And there's another major catalyst, a fresh 400 crore rupee rural water supply project awarded by NKG Primus JV. The order includes tube wells, pump houses, overhead tanks, rising mains, and household water distribution systems. This takes the company's total project pipeline to around 765 crore rupees. With execution scheduled through 2027 and 2028, investors will now be watching whether the company can convert this strong order pipeline into sustained revenue and profit growth. Next, Tata Power faced heavy selling pressure today. The stock fell more than 4.5% to rupees 348.20, hitting a 7-month low and becoming the top loser in both the Nifty 200 and Nifty 500. The trigger was a major legal setback in Singapore. The Singapore International Commercial Court dismissed Tata Power's appeal, upholding an arbitration award of approximately $490 million or around 4,100 crores in favor of Kleros Capital. The dispute goes back to a decade-old partnership involving a proposed acquisition of Russian coal reserves. Tata Power has said it plans to appeal the ruling within the permitted 28-day period. For investors, the key factors to watch now are potential provisioning, the financial impact, and the next stage of the legal process. That makes Tata Power one of the key stocks to watch closely in the coming sessions. Now, an important update for the IT sector. TCS has rationalized quarterly variable pay for mid to senior employees while keeping payouts for entry-level employees intact. For Q1, mid to senior employees received an average variable payout of around 60% to 70%, compared with up to 80% in the previous 2 quarters. However, junior employees, who make up the majority of TCS's workforce, continued to receive 100% of their quarterly bonus. Meanwhile, Infosys also reduced its average Q1 variable pay to around 70%. Moving to the IT sector, TCS's Q1 operating margin declined 130 basis points sequentially to 24%, partly due to the impact of annual salary increments. The company says it continues to prioritize investments in AI capabilities and partnerships. Another important point for employees and investors is TCS's work-from-office-linked variable pay structure. Employees with attendance above 85% are eligible for full variable pay, while lower attendance levels can reduce the payout significantly. So, the IT sector continues to balance cost control, employee policies, AI investment, and margin protection. Next, HCLTech has announced another important global delivery partnership. Munich-based Wacker Chemie AG has established a global capability center in Pune in collaboration with HCLTech. The center will focus on engineering, IT, cloud modernization, DevSecOps, automation, and digital transformation. This partnership strengthens HCLTech's presence among European industrial clients and could support its long-term growth in continental Europe. For investors, the bigger takeaway is that global companies continue to use India as a strategic hub for technology, engineering, AI, and digital operations. And finally, another major AI and technology expansion in India. LTIM has inaugurated a new global delivery and AI competency center in Kolkata, West Bengal. The center is designed to strengthen global delivery capabilities and accelerate AI-driven digital solutions for enterprise clients. The company plans to leverage Kolkata's strong academic ecosystem and skilled workforce to build future-ready technology talent. LTIM's leadership highlighted the role of Kolkata in supporting AI-led transformation and regional technology employment. With more than 87,000 professionals across 40 countries, the new center adds another important piece to LTM's global delivery and business AI strategy. And that brings us to the end of today's post-market report. Today, we saw selling pressure continue in the Indian markets, while power stocks rallied on AI-driven electricity demand, gold prices remained elevated, Tata Power faced a major legal setback, and several companies announced important business and technology developments. As always, keep an eye on global cues, corporate announcements, and sector-specific developments before making any investment decision. If you found this analysis useful, make sure to like this video, share it with your fellow investors, and subscribe to Stock Market Meridian for daily pre-market and post-market reports. I'll be back tomorrow morning with another detailed pre-market report covering global markets, important corporate developments, commodities, and the key factors that could influence the Indian market before the opening bell. Until then, signing off, Jai Hind.